Hello and super evening everyone. Hope all of you are doing great and thank you so much for joining yet another live session with me. Hope all of you are doing great and enjoying your evening. Great to have you here. This is a very special session which we are doing. It is Ask Me Anything. So we will discuss about lot of different things in terms of investing. We will discuss in terms of process, how to allocate your funds well and how to overall take the great decision in terms of your investing. Okay, so please feel free to type in your question. And those who don't know me, I'm Vivek Mashrani and I'm a founder of Technofunda Investing process, and I call myself Technofunda Investing Specialist. What we do is basically we blend anything and everything around technical analysis and fundamental analysis. The reason we do it is from fundamentals you get conviction around the business, and from technicals you get understanding of the supply and demand, and you can also have your entry and exit system process through that. So that is what we do. For those who are not yet connected with me, and those who know me, I'm sure you have seen the work and you've gone through the different videos and also checked out the website. So without any ado, please type in your question and let's begin in this Ask Me Anything journey. Awesome. Thank you so much. So let's get to the first question. Okay, so the first question is from Rachit. He's saying how to handle drawdowns mentally. So the simple answer to this is build systems. You need to have a system in terms of buying, you need to have a system in terms of adding, and a system in terms of exit. Now, most of the time what happens is when sudden volatility happens or something happens like ups and downs happens in the market, that is where we start thinking, now what should I exit? Where should I exit? What should be my percentage drawdown? Like how you are asking the question right now. But they should be pre-embedded into the system. While even you are taking buying decision or even before taking the buying decisions, you need to have a clarity in terms of how much I am willing to give back to the market, how much drawdown I am willing to take if that situation occurs. Okay, and based on that your exit system should be defined. So whatever indicators or stop losses or any percentage based exit system which you are devising, that should be the basis of how much risk you are willing to take. Okay, so and it is very personal to each and every individual. For me, what I do is personally in my satellite portfolio, I'm relatively fine for a 10 to 15% drawdown from the top. Like if I'm following a weekly chart, even if it falls like a 15%, that's a decent drawdown for me, and then I have my exit system. And in terms of my core portfolio, it could be even higher, right? So anywhere between 25 to 35% is what I see in terms of my drawdown for my core portfolio. Now, having said that, you can still reduce your risk by position sizing, right? So you don't need to like go all in and then have a 15% drawdown. That is not how you should be doing it. So you can take a smaller tranche. Like if you want to invest 5%, instead of investing 5%, you only put 1% at one time. And then as the market or the situation goes in your favor, you can start adding your positions. Okay, so that is how I approach this entire game. And I've created a special video on this. You can go and refer it later. You can just search with how to outperform Nifty returns Vivek Mashrani, and you'll get this detailed video where I've discussed this entire process in a much deeper way. Okay, but hope this entire answer was useful. If you need any more clarification, please feel free to let me know. Okay, so our next question is from Yash Satra. Okay, so Yash is asking, like, while learning from your Technofunda courses, what should be our approach to get best to learn fast? See, the entire focus in our entire investing journey, what we have discussed in our Technofunda community also, is focused around implementation. And I would not even call this a course because it is more like a community, right? Course is just one small element of what we are doing. So the first thing you should do is make most of the community which is out there, right? Connect with like-minded people, have somebody to be an accountability partner with you so that you can have a right kind of mindset and right kind of accountability from the day one. And then you'll not feel alone. Most of the times when we go through the different online courses is where we just sign up across a Udemy course or a Coursera course and there is nobody to handle or nobody to talk to. But that is not the case here because this is not just a course, it is more like a community. So connect with the members, start with the sequence of different modules, like right from the basics like business analysis formula, we go deeper and connect all the dots. And every Saturday when we do our mastermind where we meet, if you have any questions, you can ask your questions, you can get your doubts clear. Please connect with all of the members every single week over there. And most importantly, the implementation process which we do, where we actually make you to implement all the concepts during the hackathon. Please participate in that hackathon. That will be like game changer journey. We have more than thousands of people who have actually implemented that system and they've got great results out of it, right? So make sure you follow these steps and I'm sure it will be great for all of you, right? So let's give a thumbs up to Yash and give him all the best for his learning journey. Just put a thumbs up so that he gets a notification as well. Thank you so much, Yash, for asking that. Superb. So Ashwini Kumar is saying, where is Nifty 50 and small cap index headed? So that's a very interesting question. In fact, I was just looking at that. I'll just share my screen and share my view on both these indices, how it is going and what is right now the situation. Okay. So let's go to the Nifty index first. Okay. So if we go to Nifty index, Nifty had on a daily chart, very, very strong resistance at this point. Okay. Which is let me see, somewhere around 18,600 point, where it just started falling on 2nd December. Then there was a long downtrend that occurred from that particular price, right? So it seems like, it's probably a resistance zone where Nifty is probably fair valued or slightly overvalued. And then our trend started picking up again in mid of April and we had a one-way rally. And a lot of our community members also were able to participate and made a lot of good compounding during this period. Now it again hit this resistance zone at 18,600. Thrice it has tried to breach it, but it is unable to breach and then it is slightly going downwards now. So based on my system, it's slightly a cautious zone on Nifty side. It has in fact triggered my exit system also, like overall whatever indicator I'm using, it has actually triggered the exit. So it's not a very bullish time to be in this entire scenario. Okay, so that is on Nifty 50. Let's come to the CNX mid cap, what it is talking about. So if we see CNX mid cap, pretty much similar thing that happened, but good part is mid cap index was much faster. It bounced back very swiftly and it also crossed this resistance zone in a very, very like simple, very easy way. It has crossed and then it is much farther than that. But if you see last 2 days candle, there has been heavy sell-off in the mid-cap space. Okay, although the trend is still not like fully broken, like until we see like X, Y, or Z or red candle, which is signifying the exit, we are still in a slightly territory where we need to be very cautious. So tomorrow, if say Nifty again breaks out and it goes further above 18,600, we might see a recovery in mid cap, but it is not a time where I feel we should be like going all in inside mid cap index. It is time to just wait and watch. Okay, there is no time to panic also. It is not time to be like putting money at this point of time. No fresh money at this point of time. Just wait and watch. Our exit starts triggering, then we can exit. But definitely not a time to panic at this point of time. But Nifty 50 definitely it looks slightly more weaker than mid cap index. Now let's come to small cap, which is CNX small cap, Nifty CNX small cap. Same situation. I think this also decisively broke the resistance and made a new highs. And it was a very, very bullish phase, like almost last 2.5 months. The index itself was like around 15% up. Okay, so great time to be in the trend. But now again, it is time to wait and watch and see if the exit is triggering or the trend is recovering. So it's more like a pause in the trend for both these indices. Nifty definitely looks like slightly more weaker in this journey. So hope it gave clarity to you. Thank you so much, Ashwin Kumar, for asking this question. Yeah, thank you so much. Now let's come to other question. Okay, very good question in terms of capital allocation. So Rupesh is asking, Say for example, I took 3 tranches, and say after 3 tranches my exit is occurring, and now again that same stock I want to re-enter. Okay, so my re-entry is getting triggered. What should I do? So whether should I deploy the full capital or I should start with the tranche 1 again? So my answer would be always start with the tranche 1. So whether it is the same stock or a different stock, it doesn't matter. For us it is journey from A to B, C to D, E to F. Right? So wherever you are started, it is a new position. Just think like a sprint, okay, from point A to point B. So the process will exactly remain the same. You don't need to like tweak the process, because what ultimately is needed to make returns in the market is managing your risk. If you are able to manage your risk, the return will automatically happen. Okay, so that is what is the key. So please stick to this process and do it. Whenever you do re-entry, just start with the first tranche, 1% tranche. Awesome. Hope all of you are enjoying this session. If you are enjoying it, just hit a thumbs up so that I know you are getting a lot of good insights from this session so far. Let's go next in terms of Akshay Tank's question, right? So he says, how much share you add in satellite portfolio? So I can take a lot of tracking positions. So tracking position is basically anywhere between 0.25 to 0.5 or 1%. And it is more like a testing the water. So I see whether there is a strength and whether it will pick up or not. So I take that kind of small positions in my satellite. And ultimately my objective is to take it to 5%. And 6 such position, if I am able to take it to 5%, that will completely fill up my satellite portfolio. So ultimately 30%, which is allocation of my satellite portfolio, ultimately I want to fill it that fully. Okay, so satellite tranches, whatever small tranches, tracking position, whatever amount you have, that doesn't matter. Like fully 6 position is what you should target for. Yeah. Hope you got an answer on this. Yes. Awesome. So let's go to the next question. Ashwani Kumar is saying, which mid-cap stocks you think are undervalued? I think in this kind of market condition, very difficult to find too much undervaluation, but it's like a very, very broad-based question. Probably, you need to run some screening around it. Again, we have a detailed video in terms of how to run the screens. You can go and check it out. I think we did a video on screener. Let me see if I can pull that up. So this is the video which we did, fundamental analysis of stock using Excel screener, where I've discussed a lot of these techniques. If you want to filter stocks using screener, you can actually put up a criteria of whatever valuation metric you are tracking, and you will get the list of all the undervalued shares over there. Yes. Yeah, Sudhakar is saying, if a share I bought when first tranche was added, it went up by 15 to 20% in 2 to 3 days. Can we add a second tranche immediately or wait? So generally what I do, Sudhakar, in these cases, if I'm following a daily chart, okay, if I'm following on a daily basis, as soon as it makes a new high, right, with a solid candle, I prefer to add. Because stocks like these, which you are mentioning, that 2-3 days if it is going up like say 15-20%, generally, these are highly cyclical stocks. So if you wait too much, what happens is they might get extended and you might enter too late in terms of your subsequent tranches. So my thought process is very simple. As soon as you start making new highs, you keep adding your tranches. That is how you should follow. Another way to look at it is, if you want to manage your risk, if you are aware about residual risk concept, another way to look at it is, first take a residual risk of less than 10%. So single digit residual risk. So something happens, you should not lose more than 9% in that particular stock. Second tranche, when you add, your residual risk should remain the same. So say for example, when you were at 100, you kept a trailing exit of say 10 rupees, hypothetically. Again, it should be less than 10, but let's take 10, just a circular rounding number. Now you went from 100 rupees to 110 rupees. Your risk should still remain 10 rupees, and that is how you should add the second tranche. That even if your exit triggers after the second tranche, you should not lose more than 10 rupees. And whenever you add a third tranche, you should make sure that your stop loss is such that you don't lose any money. You don't give any money back to the market. So that is how you can structure your overall tranching system. Okay. Okay, hope this was useful. Again, thank you so much, Sudhakar, for asking this question, and hope it is useful to other members also. Okay. Yeah, Suja is saying, why did Arti Industries fall? I don't have answer to that because I'm not recently tracking this closely fundamentally. But if you see the character of Arti Industries since quite a while, if you go in a weekly chart and see what is happening here is, it is into a big stage 4. Okay, so I cover this technique as a stage analysis technique in my hackathon also, like how to find stages of the company, and this clearly is in a stage 4. So irrespective of what is happening into Arti industry or irrespective of the news around it, generally I don't prefer stage 4 companies because that can be very brutal. We have seen in multiple such companies. I'll give you some US examples also, like say Zoom Mobility, which is a Nasdaq 100 company. You can see exactly what happened to these companies, right? And I keep taking this example again and again, and when I revisit it is like making new lows even after a few months, few weeks also, right? So that is where, you know, it is very brutal. Like if you see this entire stage 4, this is like a very brutal phase. So irrespective of the news, I think it is very dangerous to be in the stage 4 zone. Okay, so hope that gave you some idea in terms of how to analyze such companies like Arti Industries. Yes, thank you so much, Suja, for asking this question. So it is really in like a terrible downtrend right now if we think about it. Okay. Okay, let me take a question of Sandhya. Okay, Sandhya is asking, please share few indicators which we can use in our investing journey. Absolutely, Sandhya, happy to share that. So let me, go to my list of indicators. So I'll just hide this. What I've done is I've combined all my different indicators into this one indicator called Shaktiman. But if you want to start using it, there is some of the powerful indicator which you can use is first, you can start using exponential moving average, right? This helps you to ride the trend. Like if you see Zoom Mobility, if you just make it like a 21 weeks kind of average, you can easily ride these kind of trends using technical analysis. And that is the reason I tell everyone that even if you are very strong fundamentally, right, just adding a layer of technical analysis can benefit you in a long way. Okay, it can hugely benefit you and it can help you in your exit system also. So this is one of the indicator which you can use. The second indicator which I use for my overall analysis in terms of trend is called ADX. Okay, so you can use this ADX indicator which gives you trend strength. There is one more very powerful indicator which is called RSI. So I use combination of RSI as well as ADX. And one more very powerful indicator which I learned from one of a good friend, Premal Parekh is called relative strength. Okay, so I was infrequently using it, but when I got in touch with him and I learned from him, I got a lot of powerful understanding around how you can apply this in a investing journey, right? So this is what, again, one more indicator I use. So you can change this settings when you are using it. So you can make it to like Nifty 50 while comparing the index. And the period you can do like 6 months, that is 123 days. If you are using a daily chart, if you are using weekly, like right now how we have done, you can use 52 weeks. That is like 1 year period. So that is how this has helped immensely. Like these are some of the indicators which you can use. Apart from that, if you want to use some of the other indicators, you can use parabolic SAR, you can use V stop, that is volatility stop. These are all very powerful indicators which any investors can use. And these are not too difficult if you learn it in the right way. Like I pretty much use only 5 to 7 prominent indicators. And then to declutter my process even more, I've combined all my indicators into one indicator. And that is what all of you can do. You can actually build your own systems. Once you are comfortable with certain indicators and you master those, you only stick to few patterns, few indicators, declutter your life, and that is what will create the magic. Yes? So Sandhya, thank you so much for asking that question. Hope this was useful. And guys, if you are not connected with me on Twitter, you can go to @Mashrani Vivek. Let's stay connected. And we can share a lot of ideas on Twitter also. If you are on YouTube right now, you can keep typing your questions And if you are watching from Facebook or Twitter, you can check out our YouTube channel also, Vivek Mashrani Technofunda Investing, and you will see a lot of interesting material in terms of your investing journey, how you can be better in your investing journey. Yes, so let's go next in terms of question, which is in terms of how to find extended stocks. Manisha is saying how to find extended stocks. So there are certain principles which you can use to find extended stocks, which are called violations, right? So one thing is, like normally if a stock moves like 25-30% away from the base, that is one sign where potentially it might be extended. Now, sometimes, the market is in a good trend overall, the structure looks good. The company might have a very big earnings trigger. It might, double also in no time. Although it might be extended, it can continue to have more and more momentum. So some of the clues to look for, extended stock is, one, you can see whether if there is any profit booking or down move, whether it is with a very high volume. That is one of the sign that, there is some trouble into it. Or you see like consecutively 2-3 days of follow-up selling, like 3 day consecutively you see selling despite market being a normal market condition. That could also be potential sign that there is some bit of fatigue and profit booking that is happening, and potentially it has gone into extended journey. And many times, some of these indicators like RSI also helps you, like if it has gone far above 80, 85 for a long period of time, those are the signs that probably some profit booking might come up. So you can use multiple of these things to determine your extended stocks. Yes. Thank you so much again, Manisha, for asking that question. Awesome. Let's go to the next question. So Deepthi Jain is asking, in core stocks like VBL, IDFC First, Titagar are extended 20 to 30% from 11 weekly EMA. Should we book profits or let them run? So I feel for core portfolio stocks, right? The thought process itself is, you feel that these are consistent compounding companies. Like ideally, I would not even have Titagar Vegan in my core portfolio, right? If I would have been in your place, I would probably put it into satellite, because these stocks move very fast and there are still cyclicity involved into this. So until I'm convinced like this is like a good compounding company, I would not classify those stocks into core stocks. Even if I'm doubtful, I'll start with satellite probably in a weekly time frame and then move it to the core side of it. So I believe in core, there is no need of like just thinking too much about extension and all those things. If it is like a decent compounding company, over a period of time, it will keep on going into that 45-degree curve. So have your exit system in place on monthly, but there is no point in like doing too much over analysis on it, right? Just because it has run up too much too fast. Okay. So hope that is useful perspective, Deepthi, for you. Thank you so much again for asking that question. Let's go next and let's see next question. Okay, so Dikshant is asking like, how can I create a swing trading strategy from scratch? Now, how many of you have this question, if you want to understand this entire process end to end, okay? Superb, thank you so much. Those who have the same question, just hit a thumbs up so that I know you have the similar question and you want to learn about this. So I'll break down the process into few parts, right? So first and foremost thing is the thought process in terms of understanding who you are, like how much risk you are able to take and how much capital you have. Second perspective is whether you are doing trading or investing like a full time, like this is your only source of income which you are dependent on, or whether you are doing it part time and you are doing some job or you are doing business and you have consistent steady flow of income. So if you are somebody who is totally dependent on this and you are slightly stretched in terms of financial requirement from the markets, that means your risk taking ability is on the lower side. Okay. And that is where I would say that when you start doing this stuff, first start with a smaller allocation of the capital, irrespective of how you build the system. And if you have other sources of income, you have good cash flow coming in, you can have slightly more exposure, but of course you should learn it first. Now, first step when it comes to building your system is thinking about how to, even screen your companies, like how to buy companies which you want to actually trade or invest for a period of time. Now, if you say swing, I consider swing mostly on a daily chart, like less than 2 weeks kind of time frame. I would recommend you to try positional investing, which is anywhere between 2 weeks to 6 months kind of approach, right? That works even better with a much lesser strength. So starting should be your screening process, like what kind of stocks you want to select, whether you want to select a breakout stock when it is breaking out, or you want to slightly go below in a cheat area and you want to find stocks which are potentially breaking out. Okay, so those are the two thought process. You can start implementing it, and then you should have a screener. Like I use a different screening process, like I use a combination of price volume action, ADX, RSI. I also filter by relative strength. I also filter by whether it is making a new high or not, or whether the distance from a new high is less than 20%. So you can filter your criteria, whatever suits you. Whether, again, another perspective is there are two types of people when it comes to selection also. Some are trend followers. Okay, once the trend is established or breakout is happening, they want to enter at that juncture. Some people want to do a turnaround play. So when the base is, like stage 4 has completed and the base is starting to go up, they want to enter much before the breakout is happening or much before the trend is getting established. So you need to again know this. Another perspective to do this is either you can take a breakout directly when it is breaking out, or some people prefer pullback. Like once it breaks out, it pulls back and then they want to re-enter the stock. So decide like which strategy works better for you and build a mechanism or screen around it. The second thing is think about residual risk, like how much you will lose if things will not work out in your favor. And based on that, you should decide the adding position, like how you can keep adding tranches at the same time you keep your risk constant. And third, finally, very important thing is exit system. And your exit system should be defined even before you are taking a position, right? That what if this doesn't work out, where I'll exit. If you don't do that, you will like brutally get penalized in the market, because you can randomly buy any company. Somebody might have just shared a name and you might not have a process around it. But when it goes down, when the risk actually emerges, you will not know when to exit. Okay, so that is very, very important. And exit or risk is very, very individual. So for somebody like me, it could be a 15% drawdown I'm fine to live with. But for somebody who is less risk averse, or they want to like generally have a smaller position in terms of risk, they might want a 7 to 8% drawdown also, right? So risk is a very personal aspect. You cannot generalize it, but having a solid mechanism to build your risk is super important. Okay, so if you want to learn this, I've shared a link also in the description as well as comment section. You can join one of the detailed masterclass where we go deep dive into this entire system building aspect for almost like 45 to 50 minutes, and you will get a holistic perspective around it, right? So you can check that out. Superb. So let me see what is the next question. So Yogita Gupta is saying, very good evening. Thanks for doing this live. Can you please put some light on HDFC AMC prospect in next 2 years? So again, I would prefer giving you the thought process in terms of AMC industry, right? So that will give you an idea about how to go about your HDFC AMC. So if you think about the AMC business, it's a good mega trend, but the shift is happening more towards direct mutual funds, towards more passive income mutual funds, and there are more and more new players that are emerging. So the competition has been fierce, and more than AMC, the distributors are actually very strong in this value chain. And if you think about overall stock also, HDFC Asset Management, it has been lackluster, like it is just not going anywhere. And if you even see from a longer time frame perspective, it is again, still yet to form a full consolidated base. So in my view, I think you can get better companies than this. Again, a quick disclosure that this is not a recommendation. Again, this stock I don't hold in my portfolio, and as I said, you can get much better plays in this particular place. There are a lot of NBFCs, there are a lot of good compounding companies in the financial space. versus the AMC business. And AMC is again very highly cyclical. It depends upon the AUM. When the market will be down, these kind of plays will get butchered. When market is up, they kind of move up. Okay, so that is what is the perspective. I think I did not share the screen, but I think, yeah, here you go. So this is what looks like. Okay. Superb. So thank you so much for asking Yogita for this question. Let me go to the next question. How to know the investment cycle for investing in mutual funds? Raj has asked this question. So I'll give you a simple tip. Okay, how many of you want a simple tip in terms of your mutual fund investment if you are doing in equities? Okay, this will help you to actually make most out of your mutual fund investing. Let me share this quickly. So what you can do is like how I showed. And this I've been applying myself, this strategy for Nasdaq 100. I'll just let you know. So what you can do is actually you can have any kind of entry exit system. Like you can build a system for yourself. Now suppose you don't have time, you don't have much of bandwidth to monitor and build a portfolio yourself. What you can do is you can have this kind of system on Nifty. You can do either on a weekly charts, or you can even do on a long-term monthly charts. Okay, ideally weekly is even better because then you can get a better returns. Now what you can do is whenever this weekly, okay, in your system it is triggering green or entry, you keep adding your mutual fund SIPs. Okay, so say for example from June 2020 till what time? November 2021. Okay, so almost for 1 year, 3 months, this was giving you a buy signal. So you keep adding your mutual funds every single month, you keep doing your SIP. When it gives you exit, you take a profit booking position. You either partially exit or fully exit. And then again it gave you entry over here, and for some period of time here. You again ride this trend, and when it gave you exit, you again exit for these many few months, right? So almost like 3 months it took you out. And then again for almost 3 months you can ride this trend. So a lot of people think that, buying a mutual fund is like buy and forget. It is not the case. Of course, you will have some bit of more taxation in this process, but your returns will be more optimized. Okay. And there will be times, right, where things will not go anywhere, right? So you can see like this entire almost 10 months, there was no return in entire index. You will also get saved from this kind of big butchering in the COVID kind of phase when it happened, right? So you got exit signal much before, like on 24th February itself, it triggered the exit, and you might have avoided such a big drawdown in your portfolio also. And you could have bought much more when the recovery happened, right? So you would have a cash to deploy also. So this is how you can put this process in place. I applied this process on Nasdaq 100, right? And I'm buying Nasdaq 100 every single week and month as per this process. So you can see Nasdaq 100 was in a full uptrend, right? For entire 2020 to 2021, it was into full uptrend. Let me load this properly. Right, so it gave a full uptrend for so many weeks here, and then as Nasdaq 100 topped out, right, probably in the range of 16,300, it gave me the exit, and then for many weeks there was no re-entry, and only over here somewhere the re-entry has decisively come in. So I could avoid this kind of 40% kind of drawdown, and I can buy more at a slightly cheaper position. So this way, any such indices or any such charts, you can apply your system which you have prepared. It could be any indicator, any system which you prefer, and you can, go deeper into this journey. Yes? So Sandhya is saying, sir, investing in Nifty ETF will help. Absolutely, it is a good proxy of Nifty 50. You can even go and take an exposure of ETFs also. It is fairly liquid, and it is a very good product with a low cost. Okay. Awesome. So let me take next question, which Mike is asking, which is in terms of what do you think about Balaji Amines? So I would again ask all of you, right, based on what analysis or discussion which we did on stage 4, let me show this chart and ask all of you what do you think, okay? So that it gives you clarity and you can learn the process rather than depending on each of the stock idea. Now tell me which stage this looks like, okay? Like Balaji Amines chart, this is again weekly, so you can see like a clear uptrend and you had entire green during this zone. There was no exit triggered. So if you think about this, it was like a one-way ride from all the way right 450 rupees to 3,800 rupees. So you could have easily done like at least 9 times your first tranche kind of growth and multiplication in your less than 2 years of stint, okay? From not even 2 years, it is like June 2020 to October 21, right? So 1.5 year, 8 times. But then if you see, it is now entered into stage 4. So what do you guys think? If it is in stage 4, should we be there or we should stay out? What should we do? Yeah, a lot of you are saying stay out, and that is the right answer, right? So ideally, it is good to stay out in stage 4 when there is a significant downtrend. And that is where, we need to build a system where our re-entry also triggers, okay? Shailendra Gujarati is saying, is it good to be a full-time trader? So if I tell you honestly, trading, if you do short term, right? If you do like a intraday trading or future and option trading, very, very ultra short term time period, the probability of success is very, very less, right? So almost like 89% of people fail as per a recent SEBI report, and 11% of people only make it as a profitable trader. Now, I'm not saying making big money, that could be even smaller percentage of people, but those who just make profits, right? Those who just survive, those are only 10 to 11% kind of people. So my, advice to you would be, unless you are really confident in terms of being full-time trader and you have perfected your strategy, you have applied for few years, it is not the good place to be in. Rather, you can think about more of a positional investing and a long-term investing. That is where, the risk reward are much higher. The process is more peaceful. It is much less stressful. There is no leverage involved if you do it properly. And the biggest thing is, if you ride these kind of trend, like I showed you Balaji Amines just recently, like if you make a 8x in 1.5 year, right? Like your 100 rupees become 800 rupees, or 1 lakh rupees become 8 lakh, or 10 lakh becomes 80 lakh. That kind of multiplication doesn't happen in trading, right? One of my mentor who does trading, he did 323% return in 1 year, right? Now think about this, like one of the biggest, greatest trader, Mark Minervini, if he is doing 320%, and he also does bit of positional, he doesn't do intraday much, okay? Think about doing a intraday trading, how much is your odds to make that kind of returns, right? So better is to, be focused in terms of slightly positional and long term, understand the game, ride the winners wherever you are getting. You will get few, positions where you might get smaller returns or your stop loss might get hit. But one such Balaji Amine with a 5-7% allocation can entirely change your game. Okay, so that is where take a very meaningful decision. Don't go into trading into haste. Start with a small capital. If you want to start, I generally don't recommend intraday and F&O trading. But even if you want to start with a small amount, get confident, understand how the game works, build your own system. And then if it works, then you take a decision to be a full-time trader, right? Because market has its own cycle and sometimes you need to sit out also in cash without doing anything in the market, okay? Awesome. Thank you so much for asking that question again. So Manu is saying, what is called intrinsic value and fair value to choose the stocks to buy? So basically it's like, reasonable price. जब हम market में जाते हैं, we say कि भैया थोड़ा reasonable रख लो, थोड़ा price ठीक कर दो, right? That is what we do in stock market. That was, you are too much valued, तुम्हारा value इतना है, you are asking so much. So once it comes to fair value, right, where it is like optimum value for that particular company, you tend to buy it. That is in a very simple sense, intrinsic value or fair value. Okay. So thank you so much again for asking that, Manu. Hope this was useful. Nilesh is saying, agree with your views on intraday, but only successful trader become full-time trader through intraday. Isn't it correct? Yeah, absolutely. So only if you are successful, then you think about doing it full-time. Don't just jump in because somebody else is doing or your friend is doing or somebody else is making money. It doesn't mean it will work for you as well. Okay. Superb. Thank you so much. Yeah, so Suja has a very good question. What is your opinion on PSC giving regular dividends but hardly the value go up? So not just PSC, I'll give you a broader perspective around this question, right? Because this is a very, very powerful question. I get this from many members also that, Vivek, I'm getting 7% returns in my FD. Why not buy a stock with, say, 10% dividend? Isn't it a better choice because I'm getting 3% extra? First of all, earlier dividend was not taxed. Now dividend is getting taxed, right? So just like how your FD returns get taxed, your dividend returns also get taxed at a nominal rate. So first of all, you lose on the taxation front, upfront itself. Second thing is, think about whether you invest in equities for a long-term growth, wealth creation, or you invest in equities for a fixed income. Okay. See, fixed income is an instrument where you have capital protection. Like if you put money into FD, say 100 rupees you put it, 7% if it is promised, you receive that 7% no matter what, unless the bank defaults or it goes bust. Okay. So your 100 rupees doesn't get any scratch itself, right? It will remain 100 and on the top of it you receive 7 rupees. Now, is it possible for the stocks? Right? A 100 rupee stock which you might have bought it can go 50 rupees also. There could be some negative news around the company that might come up, or the market suddenly starts falling and your stock also starts falling. And by the time you get that dividend, say 100 rupees you bought it thinking that I'll get 10 rupees of dividend, it is 50 rupees. And even if you get 10 rupees of dividend, your net amount which you are left with is 60 rupees. So you made actually a loss of 40 rupees. So please understand that equity is a volatile asset class. It is not like the share price is always going to remain like that. And when you are buying a dividend yielding stock, it will only add to whatever price you bought. It can also fall down. So equity should be used as an instrument, in my view, for growing your capital. Okay, how you can grow your capital and how you can compound it. And that is where it is much better to buy a growth stock at a reasonable valuation rather than buying a stock which gives a dividend. Another perspective is why company gives dividend. Most of the times they are not able to use that money for their future growth. That is the reason they are giving out as a capital, as a dividend. Or it could be a business like CDSL or IEX kind of business where they naturally don't require capital. That is a totally different story. But if a company is not able to grow and gives out dividend to you, that is a very, very scary situation to be in for a long-term investor, right? So think about this, and I'm sure you will get answer to whether to invest into dividend yielding PSE stocks or to invest in a growth stock. Yes, hope this perspective was useful to everyone. Awesome. Thank you so much for asking that. Let's come to Ajay Soni. So Ajay Soni is saying in core portfolio, percentage minimum allocation and maximum allocation. So what I do personally, again, you should watch the video which I suggested to all of you for a deeper understanding. But what I do personally, I'll just give you the link. This is the video you should watch. How to outperform Nifty returns. Just Google it and I've shared my portfolio process. What I do personally is in core portfolio, I have 70% of my portfolio allocated and I go about 5 sectors. So each sector is anywhere between 15 to 20%. Again, I've created a video on sector also. You can see top 5 sectors. Vivek Mashrani, you will get an video also around that, like what top 5 sectors. I think this is the video which I keep an eye and keep a radar on and I focus on. So you can watch this video also later. And each sector I keep like 3 to 4 stocks, right? So each stock is 5% maximum valuation allocation. Okay, So if I want to say have a sector with a 20% allocation, I choose 4 companies with a full 5% allocation. So minimum it could be as low as 1%, but maximum I take it to 5%. That is on my initial capital. Now what if that stock keeps running and it multiplies and it becomes bigger portion of the portfolio? I let it run. Okay, so I let it run up till it becomes like 20 to 25% of my portfolio, because only those kind of winners will make a big difference to our portfolio, and we need to let our winners ride. Okay, so that is the perspective which I follow. Hope this is useful to you. Yeah, thank you so much again for asking this. Yeah, Sudhakar is saying, sir, I had watched your 2 free classes and become your fan. No one ever says to be healthy, says keep away from mobile chatting. Thank you for providing meaningful videos. Thank you so much, Sudhakar, and glad it was useful. All the best in your journey. And yes, that is what is my perspective always. See, money is always a byproduct. Okay, it's a value exchange. If you do something good for society, you will get money, you will get paid, right? If you are a great scientist, you will get paid. If you make one of the best software in the world, you will get paid. Okay, you will, if you solve people's problem, you will get paid for it, and you should actually get paid for it, because then there is no motivation to do more and more good work in the society. But having said that, money is not the end to the means, right? It is one of the value exchange. Like you transact it and do something which you want in your life, right? So if I have given some value to someone else, I get money. I use that money to say, go for a holiday or go for a head massage, whatever I prefer to do, right? So it's just the exchange. So that is where, it is holistically useful to have super focus, do things which you love to do, be passionate about what you like to do, give back to society, take care of your health, take care of your mental space. All these are things are super important, and these are very underrated, right? Today's time and age, we are surrounded by so much of distraction, and that is not good for society. If all of us help each other to become better and focused and more deep in terms of what we do, as a country we can do much better in our journey. Yeah, so that is the whole perspective, and that is where we should not lose the sight of the bigger picture while just doing our investing or trading or money making process, right? That is the big picture with which we are going about this. Yes, thank you so much again for your lovely comments, and glad that I was able to help you in your journey. Superb. So, Leela Krishna is saying, what is the volume required for perfect breakout stocks? How to avoid traps of fake breakouts? So, generally, I look for at least 3 times the volume of average volume over last 1 month and 3 months. That is the minimum criteria. Another perspective which I want to give you is blending fundamentals, right? So, if you just trade breakouts based on technicals, the chances of failure will be much higher compared to if you understand what is the fundamental trigger about the company. Can this company multiply its earnings? Are there any new capex or new product launch or something new improvement, or increase in the margin, anything which is contributing to the earnings growth? If there is a significant event around that company, the chances of failing of a breakout is much lower. The one more perspective to look at it is, if you keep an eye on the underlying trend, like I showed you initially in this video itself, small and mid cap space, right? January, February, March, it was like falling. So if the overall index or the trend itself is down, the chances of your breakout failing will be much higher. So try to align yourself with the trend also. If the trend is in your favor, your breakouts will not fail. Like if you see April, May, June, the breakouts failure were much lower compared to January, February, March. Same company, same earnings growth trigger, same fundamentals. Yes, so please try this out. I am sure it will be super helpful. What I do personally is, like, every week I just see the trend. If trend is in my favor, then only I go aggressively. Otherwise, in my satellite portfolio, I shrink my deployment of the capital and I reduce my exposure to the overall satellite positions. Yes, so hope this was useful. Leela, thank you so much for asking that question, and hope everyone else also found this useful. Let me take last one question for the day. Okay, let me see who is the fastest fingers first, and let me choose one of the prominent question which I feel it's very good for overall audience. And meanwhile guys, if you are not subscribed to this channel, just stay connected. We do a lot of these awesome stuff, and we stay connected. So if you are not yet subscribed, just hit the subscribe button. I'm not like a traditional YouTuber. I just do it for fun and just to stay connected with all of you. So I'm not very good at doing some dancing and all those things for subscribe. But if you found value and if you loved it, just stay connected. Okay. So let me see if I can get a question from one of the users. It is Mike Ross. He is asking, positional trading in option is sustainable. So see, as far as you understand the risk, anywhere it is sustainable. Only thing is options problem is time decay. Okay, so as you keep holding your options, if it is a buying options strategy, as you keep holding it, the time works against you, right? Or every single day you hold it, there is a time decay element. So even if your stock is going up, your options keep decaying. That is the biggest drawback in options. That is where I prefer that even if you want to do positional, please do it in a cash segment, or worst case futures. Don't do options, because options is a inherent time decay factor which works against any of the positional investor or a trader. Okay, so that is my perspective on the options thing. And let's see one more question if we can take. I can't stop guys. It's like, I know it is almost like 1 hour, but I feel there are so many questions. Yeah, so let me take one more final question, which is Francis Sain asking, sir, how to invest in Nasdaq? So actually, I just created a live video last week. Okay, how to invest in US markets. So please go through my channel on the live section. So I generally do videos live, so you will not see a lot of videos on the video section, because I love to interact live, and I don't need to prepare. Basically, you might have seen even right now, I do what I teach and I teach what I do. So I don't need to prepare for my videos. So I go free flow, and that is how I love to do. So please go through my earlier video, or just type Vivek Mashrani US stock investing, and you will get perspective in terms of how to take exposure in US investing market, what is more peaceful way of doing it, and what are the benefits of investing in US stock markets. Okay, so that is what I've covered in my previous video. Please go and check it out, and I'm sure you will get a lot of insights from that. So that's it from my end, guys. Hope this was useful. Thank you so much again for staying connected. We'll see you soon in the next session in our YouTube channel. Until then, keep up your good work. Do well. God bless and take care.